I built a 7-figure crypto portfolio by the age of 26, and I've worked with thousands of people around the world do the same. And in this video, I'm going to break down a basic step-by-step investing and trading course for you to start getting into crypto without making all the mistakes so many people do. Because when I first got into crypto, I literally made hundreds of thousands of dollars and then lost it all and nearly went bankrupt by making the mistakes that so many people do. But if you click off at any point and you miss a step of this process, you will become unprofitable. So make sure you walk all the way through the end. I'm going to help you make sure you crush it in crypto. Now, before you invest your first dollar in crypto, or maybe you've already invested in crypto, the most important thing you need to know is where is your money going? There's so many shady exchanges, wallets, and people trying to make you buy their thing, and you can end up making really poor mistakes if you don't know what you're doing here. The real risk of when you're buying crypto is how and where you're storing it. So many people lose their crypto by not knowing where they're sending it, or they're buying it on a shady exchange that is secretly stealing your money. That's important to understand, all right? Because crypto is not regulated like the traditional banking sector. You cannot trust everyone. In fact, I would trust no one in crypto. Start there and build trust from no trust, if that makes sense. A lot of people make mistakes of, whether they don't have the right security, they don't have the right password, they don't have two-factor authentication, or they're buying tokens and they're getting into trading bots and AI algorithms and they're trusting some guy on the internet that's going to promise them returns. Please avoid all of this. Remember that making money in any market is not easy. And anyone that's telling you it's easy is usually lying. There's no such thing as making money easy. So that's why you need to trust nobody, and make sure you do the steps I'm about to share with you in this video. Now, the first one is just getting started, how to buy efficiently, all right? Are you, first of all, an investor or a trader, all right? What is right for you? If you're looking to invest for the long term and you're only making a few buys and sells, or you're wanting to day trade and do like shorter term buys and sells, what are you wanting to dive into? Primarily who we help at Collective Shift is longer term investors that are busy. So I'm going to be focusing more on the investing side today, all right? Now, when you're selecting where to buy and sell, you've got a range of different options, all right? You've got exchanges or you've got brokerages. Exchanges are where you go in and you select what you want to buy, all right? What altcoins, and you do it all yourself. A broker is when they'll actually make the transaction for you. Now, a broker is someone that's going to charge a higher fee and a higher spread, but it can be easier to utilize. Now, when choosing an exchange, the things you need to look at is what cryptocurrencies they support, their deposit methods. Can you actually deposit the currency that you need to into that exchange, the prices and spreads, and also the trading fees. They're kind of the most important ones, and I'd really try and optimize for regulated exchanges that are well known. Don't go into different exchanges that aren't well known or are new. I would really recommend sticking with the majors. Now, you've got centralized exchanges or decentralized exchanges. Decentralized exchanges are where the primary markets are actually filled. That's where you're going to get the best access to tokens and altcoins before everyone else, but they're a lot harder to get access to. It's something we teach at Collective Shift, and I'll share a little bit about that in a second. The easier method is using a centralized exchange, and that's where the major companies work within, and that's where you're going to have an easier time navigating their exchanges. All right, decentralized exchanges are a lot harder to utilize. The next thing is you've got storage. Now, you've got custodial or non-custodial. Custodial is where you've got the exchanges looking after the crypto for you. So you might actually have your crypto stored on an exchange. They are holding it on your behalf. And this is where a lot of people have lost a lot of crypto in the past, where the exchanges have actually been hacked or scammed, and you lose a lot of that cryptocurrency. So just remember that if you had your cryptocurrency on an exchange, it is not insured, and you're not going to get it back if the exchange goes down. It's unlike a bank. Now, non-custodial is where you've actually got the crypto held in a wallet that is owned and protected by you, all right? That's usually with a cold storage wallet like a Ledger or a Trezor, which I'll get in soon. That is a must for long-term storage. All right, non-custodial is really when you've got those storage solutions that aren't visible or owned by a third party, and you have access to the keys that get you access to the crypto. Now, with your security, when you're looking at storage, security checklist is really, really important, all right? You need to think about the accounts. You need to think about, do you have the right password? Do you have two-factor authentication set up? Do you have the seed phrase stored securely and not online? I knew a client of ours that joined up actually after he got scammed because he saved his password, his seed phrase of his wallet on Google Drive, deleted it off Google Drive, but it went into the recently deleted, and a scammer knew that, logged in, found the seed phrase, and literally drained all of his money, right? You need to be really careful in crypto. There's so many people out there trying to steal your money. So you need to make sure you got your security right. Double check whenever you're like sending money onto a wallet, like send a little bit first, test with a small amount. A lot of people get scammed with the wrong address. We've seen copy and paste scams where you copy the address with it you want to send a crypto to, you paste it and it's a different address. So send a little bit first, and then just honestly have like good computer security, have good antivirus software. You need to have good dedicated emails, maybe have a good strong password, maybe a separate email account for your different exchanges. Make sure you have really good protection, even use a VPN if you'd like. Never use public free Wi-Fi when accessing your crypto as well. Now, the next part is the tax treatment. You need to really think about the universal tax basis of different jurisdictions. Normally, in any jurisdiction you are anywhere around the world, there will be capital gains, all right? Unless you're in countries that don't charge capital gains. You need to understand that whenever you buy or sell crypto, or you move it in and out of your bank account, depending on where you're at, it is a taxable event, meaning you pay tax on the profits, okay? Now, depending on where you are, it's different for different people, whether you're outside of Australia, whether you're in the US. I'm in the US at the moment. They have different tax treatments on different counties as well. Whether you're overseas, depending on where you're at, it's gonna be different, all right? But the mindset is you need to make sure that you're having proper reporting. You need to have proper record keeping and understand the different structures to understand what's going to give you the best tax optimization. All right, something we work with a collective shift where we work with you one-on-one and we set you up with the right structure. Make sure you have the right record keeping, because at the end of the day, when you come to do your tax and you don't have the right record keeping, it can be an absolute nightmare. Now you know how to buy and where to store and make sure you don't get scammed. The next part is actually how you build your wealth, all right? And that is through the strategies that actually build your portfolio to make sure you have the right assets allocated. What we're about to go through is what separates people from actually making money in crypto, because they have a proper plan and a process that they can follow, versus the people that lose, that shoot from the hip, have no idea what they're doing and just follow people online and just get sucked into the vortex of crypto YouTube. Because the only way to truly make money in crypto is by having the right insights and the data to understand where to park your capital and when to change it, all right? And that is what some people don't understand. Crypto moves every single day and everything changes consistently, hour to hour. Trump could say something tomorrow and everything changes. Their personalized circumstances are going to be different for you than someone else. So the process that we take our clients through is the thing that builds your portfolio based on a 7-step proven process, all right? And this is the same process that we take all of our clients through. We've got clients from all around the world, thousands of people we work with. And ultimately, the portfolio allocation is really important. Now, one of the core parts of thinking about your portfolio structure is, what are you building your portfolio to go towards, all right? What are your goals? What are the reasons you're getting into crypto, all right? If you have a really long-term portfolio, the core of any portfolio, in my opinion, is Bitcoin. Bitcoin should be the foundation of all long-term portfolios, all right? It is the asset that is, I guess, the OG in crypto. It's digital gold. For me, I have 75% of my portfolio in Bitcoin, and Bitcoin is the thing that's going to give you the right foundation to have that sustained growth. It's going to give you the upside without, destroying the portfolio by having so many altcoins from day one. So many people make the mistake of just going all into altcoins because they think they can make all this money, but usually the opposite happens. You take too much risk and you don't have the right altcoins and you don't make the growth. Not everything goes up in crypto. Those days are gone. In fact, 90 to 95% of altcoins are underperforming Bitcoin. So why are you taking all this risk and investing into altcoins when you can just have Bitcoin? Now, if you don't know what altcoins are, altcoins just stands for alternative coins, anything that's not Bitcoin. Now, this is where you can really take a step up, right? This is your growth area. This is the shift list. This is us at Collective Shift. We have a team of 19 now full-timers around the world. They're working, our analysts look at different sectors, are going to give our clients the most amount of growth, all right? Projects like Solana, Hyperliquid, Sui, Ethereum, these are like really good quality projects that are going to give you good upside potential without taking a lot of risk. These projects have been around for a long time. They're like the Web3 app store before Web3 was actually built, right? Imagine being able to buy and own a piece of the app store right now on your phone, all right? That is what the layer 1 blockchains are like, and they have huge amounts of upside to come. The next one, you've got more speculative coins like AI projects, meme coins. These are areas that I would have a lot of caution with. Personally, I don't invest into that space right now in my portfolio because they're very high risk. You can make money, but again, don't get sucked into the noise of people selling you online that you can go in and just become a multi-millionaire overnight by all these high risk altcoins. You need to be careful with the meme coin space, okay? Now, the last one are stable coins. Stable coins are essentially digital currencies that represent the US dollar, and they are assets that don't move in value, all right? These are great ways like USDT, USDC. I really have no preference. They're great ways that you can take profits out of your crypto and put into stable coins to reinvest, or you can put in cash and keep them in there. The reason you would put it in stable coins is because you want to sell and you want to redeploy at a future point in time. When you take money out and put it in your bank, it sometimes can be very hard to buy back in, all right? So having stable coins allows you to access in and out of the market really quickly. Now, the portfolio sizing rules here is the only risk that you should take is what you're prepared to lose. Crypto is very, very risky. We work with clients that have a minimum of $50,000 in their portfolio and above, because so many people that are new to crypto don't understand our risk appetite. Crypto is very, very risky, and you should not invest more than you're willing to lose. Okay, I've seen too many people in this space go too hard and then regret it by not investing their appropriate amount based on their portfolio size. Now, you could invest $1,000, $100, you could invest $100,000, whatever you're at. You need to understand what the risk profile is for you and think about crypto as part of your broader crypto investment strategy. Now, you shouldn't over allocate too much of one coin in your portfolio. No matter how excited you are about the project, outside of Bitcoin, I really don't like to have too much of my portfolio in any one coin. It is different for different people. If you're more advanced, this is a different thing. But as a general rule, if you're new, you want to have a more balanced portfolio and you want to rebalance it when an altcoin goes up in price and grows that section of the portfolio, because if that portfolio and that coin specifically underperforms, it's going to drag your entire portfolio results behind. Okay, so just make sure you have a nice diversified portfolio when you're just starting out. Now, when you're entering the market, we use what's called dollar cost averaging. Dollar cost averaging is when you take bits of your cash and you deploy it bit by bit over time. We don't recommend just going all in and getting all excited and emotional and trying to dump a bunch of money in at once. You want to just automate it. I took my salary in Bitcoin for 2 years. I had no money when I first started. I'm from a small town in Tasmania. Didn't have a lot of money when I grew up, and I went all in on crypto, but I didn't have a lot of money. So I took my salary in Bitcoin and just accumulated week by week, bit by bit for 2 years in and out, because I had to spend some of it to live, but like I just accumulated and it adds up. So I would really recommend automating that buying process and just keep accumulating over time. Now, some really big mistakes and basics that I see people make is loss aversion. All right. People think that they hesitate to take profits or cut losing positions because they don't want to be wrong. You don't want to have too much emotion when in crypto. A lot of people make that mistake. They get too emotional, they get too excited about it, cryptocurrency. If it's underperforming or not doing well, I would recommend reevaluating it to cut it. Or if you are an asset that's performing really well, take profits. All right. If you need help with that, it is something we obviously do at Collective Shift, but you need to make sure you're working with people that aren't just giving you confirmation bias. That is such a common thing. Confirmation bias is essentially when you get excited about a token because you hear it from someone and then you just go and read all the positive stuff about it and you don't read the other stuff. People get sucked into a confirmation bias rabbit hole when you're only listening to bullish opinions that validate your own. That's where a lot of people go wrong. You need to listen to people that have independent views and may actually have conflicting views to yourself. That's going to help you with your decision making. Don't be a part of the herd, chasing coins, chasing the hype. If you're listening to influencers online, you're most likely too late. By the time you're listening to that, everyone else is already involved. All right. You need to get access to tokens before the market goes up. That is by getting access to the primary markets through decentralized exchanges that I spoke at the start. It's exactly what we do at Collective Shift. We help you get access to tokens before everyone else does. By the time it usually hits a major exchange, you're already too late. What is your edge? What is the thing that you have that other people don't? Crypto is a market. There's winners and losers. And if you don't have an edge, you most likely are going to fail. If you have a really balanced basic portfolio and just accumulating with Bitcoin and the majors, that's great. Go ahead. But if you want to take a bit more risk, understand that, okay? The best way to stay ahead of the market is be objective. Don't get emotional. Look at the data. Create a plan. Follow that plan. And when the market gets to the peak, don't get sucked in to think it's going to keep going on higher. All right. You need to take profits because on the way down, the pain, most altcoins will go down 80 or 90%. Right? That pain of the downwards bear market is so excruciating. You need to make sure you take profits. Now, I believe we have months and months and months to go in this cycle, potentially way into 2026 and beyond. But you need to understand to have a plan is you need to write it down and follow a process to execute at the right time. All right. Without a plan, you're going to fail. And I've seen most people do this. 98% of people lose money in crypto because they have no idea what they're doing and then they have a plan. All right. So follow that plan. Now, out of the hundreds, if not thousands of clients I've worked with, over the last 8 or 9 years, one thing is really clear. If they had followed what everyone else is speaking about online, in the media, YouTube, listening to newspapers, then they would lose. Just like Chris, who was doing it all alone. He was trying to fumble around. He was a consultant. He's a dad. He had $200,000 or $300,000 in crypto portfolio. He'd round tripped, meaning he didn't sell any of his crypto. He didn't have a plan. He joined us. He worked with our team. One-on-one, we built a personalized strategy based on the things I spoke about today. We had an exit plan and he paid that down and he was able to pay off his property for completely debt-free, and he still has a crypto portfolio now for the next few years because he had a plan, right? Or Kieran, who came to us, he invested in all his altcoins because he was listening to the mainstream media and YouTubers. He was down close to 80%. We restructured his portfolio. We got into the right altcoins that had the data and the research to help him make the right decision, and he grew his portfolio over 2.5x. Since working with us. So many people like that are in the same boat of that 98% that get sucked into the noise. If you want to join the 2% and you are serious about crypto and you are looking to invest more than $50,000 in the market, or maybe you already have more than $50,000 in the market, in the link below, we put together a free training that goes through that entire 7-step process that I touched on today. Plus I talk about how we work with our clients. You can check it out. There's very few spots that we work with. You need to apply to join because we can't work with everyone. If you are interested, click the link below, we'll chat. And finally, to pull all of these strategies together and actually execute and make profits, you need to have that sell strategy. You need to plan how to sell. This is where most people go wrong. Anyone can buy, anyone can accumulate altcoins, but unless you know how to take profits and keep them, that is where the real challenge lies. If you've been through crypto before and you know what it's like to not sell, it is painful. This is what most people do. They think that they can just pick the top and, the market's going to go to this point. And when they get to that point, they move their prices higher because they get really excited and euphoric and they listen to everyone else. I did that when I first started 9 years ago. You need to have a proper process in place where markets follow data, and having an exit strategy based on logic will set you apart. All right. So there's 4 key ways to take profits in crypto. You've got the percentage-based strategy, when you take a percentage of profits at a certain point in time. You've got time-based strategy, where at certain points of time in the market, you liquidate a percentage. You've got the period of time and the action. All right. You've got the dollar cost averaging out strategy. This is where I take chips off the table on the way up rather than trying to take everything out of the top and selling everything at once. It's not reality, right? You want to take a bit out as the market's going up. And that's something I focus on primarily personally. It's where I made a lot of money. Or you can also look at the unrealized amount of profit and loss. Okay. But it all comes back to having a goal. You set the goal first. What is your goal? You want to pay off the house. You want to renovate. You want to put your kids through private school. You want to buy an investment property, build a business, whatever it is. Set the goal first. And the sell strategy is supposed to align with the goals. If the goal and the sell strategy don't align, then you've got a mismatch. Right? And that's where people round trip, and it's where people fail. Now, if you've got altcoins already in your portfolio and you're not sure what to do with them, you need to understand and ask yourself, if you had the same decision today with the amount of money you've got in that altcoin, would you buy that coin again today? If the answer is no, then why are you holding it? Because by holding a coin, you're essentially saying each and every day, I am holding this coin because I believe in it. You've got to let go of the emotion of holding onto coins that are underperforming, guys. Consider the bigger picture as well. When you're holding underperforming coins in your portfolio, all right, now this is for primarily people that are already in crypto, think about the bigger picture. What is the opportunity cost you have by holding onto that coin versus rotating to other things? So many times in my investing career in crypto over the last 9 years, I have sold at a loss of my altcoins to rotate them into better coins that have then gone up in price, and the other ones have continued to go down. If I held onto those coins, I would have been down even further. Instead, I rotated them into better coins, and I'm now up on those positions. It happened back in April this year. I sold a lot of my gaming projects, AI projects, rotated them into Hyperliquid, a layer 1 project that wasn't available on Coinbase or any of the major exchanges. You had to get through the primary markets, which we teach, and it is up 2x. And those other coins, guess what? They've gone down even further. Hope is not the strategy. You need to follow a framework and not get sucked into that feeling of being ashamed and like sad because you're down and you don't want to sell. No one cares. The market does not care. Do yourself a favor and move on. Be logical and make a decision. Remember that doing nothing is still a decision. You need to make a decision to make the framework to grow your portfolio. Most people freeze at the wrong moments because they're too scared of taking profits or they're too scared of selling. That is where you need to step up and make a decision. Crypto is moving faster than ever. No longer can you just buy any altcoin and just all go up. You need to have a plan and you need to have accountability and data to help you make those decisions. I've been doing this for literally 9 years now, and I can tell you firsthand the most important thing in crypto is discipline, accountability, and having the right data and research. Because if you have any of those 3 that are wrong and you're listening to the wrong people and you don't know what you're doing, your chances of failure are significantly higher. When all of those 3 things pulled together and all those things I spoke about today, that is how you win in crypto. So if you're ready to take action and you're willing to grow your portfolio and you're serious and you want to invest or grow your portfolio above $50,000 in crypto, check out the link below where we work with literally thousands of clients now, from young, old, new, experienced in crypto. We have a personalized one-on-one coaching session where we work with you one-on-one. You get access to our full research platform I shared with you today to help you grow your portfolio, build the proper strategy, take profits at the right time. We do in-person events, we do live weekly coaching and mentoring, monthly sessions, and we help you build a personalized plan because you need something that's personalized to you, not just a general course everyone else gets access to. Okay? So click the link below, check it out. Hopefully you've learned a lot of that video. Hope you enjoyed, and we'll see you on the next one.